see if it works. All right, we are live. So we've been going over a lot of things this morning in our Discord server and showing our members how to come up with all this crazy dope on the chart, all these lines, why they matter and stuff. And you can kind of go into the descriptions, be very specific. Okay, that looks like a GAN fan, looks like the pitchfork. You can call it 100 different names. Knowing the proper ones is important if you're teaching it, for sure, but what you call it when you draw it shouldn't really matter as long as it works for you. So SPY has come through a couple of key liquidity points. This was an extension from the other day up here. Rejected that. This was an extension from yesterday. Key liquidity point down here, and that was just based on a wick at the bottom of a 5-minute candle, right? It's relevant today because it's also kind of a midway point of liquidity that will be important later. But know where the rest of it is down here. And there's always going to be supply and demand zones that change with the time frame of the chart. And that's the whole point of marking out these liquidity zones. You know where all the limit orders that way, or all the limit orders are expected to be that way. And the best part of that is knowing where you're likely to see either a transition or a accumulation and a breakout. It just gives you an idea of where to expect price action to tell you what to do next. Alright, so we have our descending megaphone pattern. It's the main pattern, and then all the subdivisions in it are just adding regression lines to it. And it's just a matter of splitting the pattern or the drawing in half on its sectors. So you have an upper range regression, center regression, lower range regression. When you're day trading, these are great. When you're swing trading, they're pretty good too, because oftentimes you can extend the efficiency of your swing trades by using these. Alright, so we broke down out of our descending channel from that diamond on the 5-second chart. I'm going to grab this line and adjust it. Becomes kind of an unorthodox trend line right there. It's like just doesn't quite make much sense, but it still touches in 3 price points that make sense for where to expect a reaction. And now we can adjust our regression line. It just extends the channel. This is the upper half, this is the lower half. If we see a reversal here, we go target regression line. First extension is going to be angular resistance. And then we start looking at if it goes outside the channel, typically you get your 50% retracement. And there's another way to see that where you go and make a measured move. So if this starts to trend between regression and angular resistance and then it breaks the channel, typically it'll be about the same move outside the channel. That's when they typically do not make a 50% retracement on the channel. That tells us either A, it can reverse there and then we can go short, or B, it'll accumulate there for a while and then eventually push that 50%. But usually price doesn't want to stay in that range for very long. Yo, welcome YouTube. Kind of like, I'm feeling a little bit off my game today. I'm just not 100% firing on all cylinders. It's like I'm looking at my charting and I'm feeling like I'm missing something. So I can swing trade with that. I'm just not necessarily going to be day trading much today. So that's a good point in our chat here. All those lines look bearish. Yes, they do. They give you a trend to follow. They give you reaction points. So if you're trading bearish and you were streaking this trend, you'll know exactly where to re-enter your position and exactly where to profit it short term. So like if I was day trading and streaking a trend, I tend to look for pause candles, and usually I will base them on moving averages more than I'll base them on drawings in the first place. So here, I might not have gone short here because implied volatility crushed from here to here, opening an option in the first few minutes. Usually they get eaten up. Even if you're on the right side of the trade, unless you get exactly the right strike, that's not going to be very profitable. I want to wait for a confirmed move like this guy here, this little reversal right here. Probably would have been okay going bearish here. And then when I see a pause candle, like a hammer, or I see a flash of green after all that red, I'll usually take profit here. And if I'm at the right strike in the sweet spot, I can turn a really nice percentage on options in that short move. Didn't take much. And then I can sit on my hands and wait to re-enter either a reversal to go back up, or I can wait for a signal to go bearish again. And in this case, I had this guy here, a tweezer top under the 200 period. That would typically be a great signal to sell right when it crossed below the 8 period right here. Or go into a put. Ride that down, find a pause candle. Well, this long wick here told me there's liquidity here. So did all these. So it was a be ready to exit that position at the first sign of green. Boom, pause candle met, take profit. Even though it extended lower, it was prudent to get out. And then again, wait for the signal. This was chop and accumulation. Bear flag. There's your signal. Right below the 8 period, run it. First flash of green, get out. Each time I would do this, I would find a strike where typically I was looking for the best position of delta shift. So I go like 3 to 5 days out to expiration if I'm day trading single legs. And I would grab somewhere where I saw delta and it's just stinking low. This is against everything everybody else says. I would find between 0.06 and 0.08 delta, because just a few strikes towards the money from that, you'll see it go to like 0.12, 0.18, 0.2 in some cases, just moving a few strikes towards the money. And that delta shift, compare the premium. So you start with like, at most I would put like an average of 38 to 40 cents, 42 cents risk in those typically. That's kind of the sweet spot that I found where the delta shift seems to be the best. And it still kind of works now, but when SPY was trading 3 expirations a week, that was flawless. And then when it started going to 5 expirations a week, it kind of skewed where that sweet spot was because it was just kind of shaking up the market conditions. Now they're starting to settle back where that sweet spot seems to work more. So I tend to trade looking just at the premium in it. I'd be like, okay, I know that typically between 38 and 42 cents for a contract is my sweet spot where I can make really quick high percentage returns. So like something like that with this little signal here, from here to here, anywhere from 50 to 100% return on an option depending on how fast the volatility climbed on that and how fast that delta was pushed. Compare that to any other option, and like closer to the money you get, the less the percentages. So I could do more with less by going into size on those. I'd buy them, 10, 20 at a time, trade them for a quick 50 to 100% return, walk away, wait for my next signal, and go back into the next strike that sets up in that sweet spot. And I would take the same risk that I took into the first trade into the second trade, and so on until that trend exhausted. I would be doing that over and over and over again. Works very well when you're day trading options until it doesn't. And that's the whole point. You keep these drawings on That's where you can get the idea of what is expected for targets aside from the moving averages. Where am I expecting to find a reversal? Well, the typical descending megaphone will touch resistance 3 times and break bullish. In this case, it didn't. So when you get these regression lines within that pattern, you can find that it'll change hands. It'll go and this was attempting a third knock on that, didn't make it, failed. We could literally draw another regression line right in here and see that price was in this liquidity zone. It's about halfway from here to here. So when we draw these lines and it looks messy as hell, to anybody but you, you're doing it right because you're doing what works for you. It makes you see with simplicity where you can affect those trades. So when this trend starts to exhaust and it doesn't quite consistently make these targets, I can sit on my hands and be ready to switch directions. Maybe I can go bullish on a bounce from here somewhere. But until then, I can streak that trend to exhaustion and never exceed the original risk of the first trade into it. That's why I call it streaking a trend. I'm taking my original investment and repeating it and taking profit. Damn, dude, nice work. And that's just paper trading. Good deal. Very,
Hello,
very nice.
What did I miss?
I'm looking in the chat, and this is Carlito's second day here, and he's paper trading on his Webull account, and he's making profit on it. That is really good. Have you been trading long and just joining us now, or are you just starting to trade there? Or starting to learn to trade with paper, for that matter?
Sorry.
You're,
Almost just got with the dang open mic thing already.
that's okay. Your workout was short.
Whoa.
I'm just teasing you.
What do you mean?
I'm yanking your chain, brother.
It's like an hour and a half.
I know. Time flies when we're trading.
Hour 15, I think, is what it ended up being.
Yeah.
Well, my workout partner, I'm like, okay, we'll do it at 6:15, right? Because I was like, I like watching the market open and see what things are doing, and I might be able to catch profits on trades that I already have in that I can just get out of or whatever.
There you go.
And then I go to work out, and he's like, I'm going to be 30 minutes late. And I'm like, Luckily, I'm 10 feet away, just outside of this tent, inside a different tent to work out in. And I figured out where he was, so I'm like, okay. I went to the bathroom, and then I saw the aircraft coming in, so I'm like, all right, sweet.
Go do some ground handling and fueling.
Not for me, no. It was taking a landing.
Gotcha.
Successful landing.
So I'm gonna come across with something that's gonna be somewhat sobering and very logical when it comes to learning how to trade and the way to keep your emotions out of it and not let your head beat yourself up later on. So this is something to help prevent you from setting yourself up for failure. And I'm going to say it very bluntly, but just know that there's some understanding here because I've seen it happen many times. I've even experienced it myself a couple times before I figured it out. So market conditions change. When we had that 12-year long or 15-year long bull market, that it was anybody could trade and make money. Anybody, right? Now we got this nasty volatility. We have come through completely changing market conditions over and over and over again. All right, it's volatile as hell. So what worked for you before, a trading style that you honed and was successful at, changes with the leaves. So even if you're paper trading, you got to understand this. If you find something that works really well and you keep telling yourself, man, it can't be this easy. What am I missing here? That's a good question to ask, and it's a good way to keep yourself from making a very fatal mistake that a lot of traders will make. And I'm gonna lay it on you here, okay? If you master one trade style and one trade technique or one trade strategy, and it works really well for a while, and you're like, man, this is awesome, I can just keep doing this, and eventually it falls apart. The same style, the same strategy starts to not work anymore. The idea is to not fall into a trap and believe in that strategy so much that I'm just going to keep doing what I was doing because it was successful. It'll tear you up when the market conditions change. And you'll still be trying to trade that strategy, and that strategy is not going to work for you. So you need to change with the leaves. So when you come to that point where your strategy works great for a while and then it suddenly doesn't, don't keep trying it. Fall back, figure out what changed, what's going on. 9 times out of 10, it's not going to be that your trading style changed. It's going to be the market conditions changed. Now you got to learn a new trick. What's going to work next? Because you can go and draw all the lines you want on a chart and scalp stuff day trading. That's great. But sometimes there'll be a time where you get such a choppy setup of price action that gives you a bunch of false signals. And you start chasing it. You start doubting your position. You start getting it out. You get eaten alive in this chop, right? That's a changing market condition. We went from trend to chop. So the ability to step back, get out of your own head and stop trying to force something to continue working. And you realize that, hey, something changed here. Either I need to sit on my hands and wait for my setup and strategy to start working again, or I need to figure out what I can do about this. That is where you start to build the skills that you're going to need and to have a whole box full of different tools to reach for in every market condition. That's where it's going to start to add up. You're going to start to find different variations or different trading styles or different trading techniques or strategies that will work with the current market condition.
That's kind of what I've been doing, Jeremy. I've been using my rectangles to work out if a market's trending upwards, if it breaks out of the box. If it's trending downwards, it's changing, it's going to trend downwards. Breaking out of the box, it's going ranging side to side. And I'm starting to get like profits every day, you know, not big ones, but it's green at the end of the day now. So it's getting easier, you know. I can see it working now.
That's it. And that's exactly it. And now, once you've come past that first time that you questioned yourself, this can't be this easy.
Exactly.
You've realized that. You've changed. You've adapted to different market conditions, and now you can adapt to different market conditions.
I've got to learn, though, to lay off while the market conditions are changing. So when it goes from ranging to breaking out of the box, give it a couple of, half an hour for it to do its thing, wait for a reversal, wait to see if it retests, and then get in. So I'm learning to do that as well. I'm learning to be patient. It's coming together. I can see it coming together.
Exactly, and that's where consistency starts to happen. It's like even while these market conditions are changing, you're maintaining momentum forward. You're growing your account. That is the key to all of it. Is like question it, question everything, and develop a strategy that goes hand in hand with any market condition you come across. And eventually, you'll have a tool for each of those market conditions.
That's what I'm doing now. I'm being quiet and I'm just testing my strategies, testing the theories, testing the boxes, and I'm just practicing now.
There you go. And that's and Carlito, I'm going to tell you that's normal. There's kind of a different breed in what you're going to find in moderators here, and there's typically two. One is going to be somebody who learned how to trade consistently successfully after having invested a lot of money into their portfolio and lost a bunch of it, and they've learned how to get it all back, how to maintain consistently profitable trading. The other style is kind of the one you don't hear about much in mainstream, by the way, is the guy who started out with a tiny account balance and has built it and built it and built it and kept it. Never gave much of it back and kept consistency, learning the different market conditions and maintaining positive movement in the portfolio. That's me. I don't know if you've heard, and I've written about it, I've talked about it, I've said it again and again. I started trading in December of 2017 with legitimately $5 in a Robinhood account and a free share of CHK. That's where I started. So I haven't had that time where I've lost a bunch of money and I'm trying to figure out what the hell I did wrong. I took a long time to build that account up slowly. And that's the whole mentality that works for me is I knew I wasn't going to get rich quick doing this. I knew it was going to take forever. The whole point of starting the account with $5 is I wanted to prove to myself that in a commission-free account, I could trade profitably. And I told myself I wouldn't add anything else to that account until I could prove to myself beyond a doubt that I could trade profitably. And at one point I was planning on adding a large sum of money to that account, and I didn't because I didn't need to by that time. Suddenly I turned that $5 into well over a couple grand, and I'm like, okay, I can just keep going. So in that space, I had some savings I could have threw in it, and instead I went and put it towards the equity of my home. So trading more or less has taught me that I consistently make profit. I might as well just have more leverage. So I pulled myself out of debt so I could have more leverage. And it made life easier to where I could learn how to be able to budget things better. I mean, the lower the mortgage payment, the more you can do. And that was the whole point, raising a family. I want to make memories with kids. That's the most important thing. That's investing in their future and mine. So that whole thing of learning how to trade and learning how to build it slowly, really, I gained, something that goes towards my retirement, and at the same time, it bought back freedom. Now I take distribution from that account, and had been ever since it crossed the threshold of where it could be sustainable as a way to supplement my income. It bought me time, so I could go and work a part-time job. I'd have more freedom to be able to spend time with the family, making memories. Eventually, just last year, I went from working a part-time job and trading in the mornings to I don't need the job anymore. I replaced my income. It just took time, and it took experience. But starting from the bottom up, that's a different thing, and that's why I'm here, in my opinion. If I would have started with a bunch of money and lost it, I probably would have just gave up. That's me. I would have just gave up. But since I started small and grew it slowly, now I believe in it, and I still believe in it, and I think I always will. And welcome, and thank you for joining us, man. That's awesome. And that brutal honesty right there, that's going to take you far, because you're being honest with yourself more than anything. All right, little double bottom here. It's kind of choppy. It's about 11:45. This is where the market tends to drag on, and SPY is great at dissolving time decay in options strategies no matter what you do. You can build condors out of this, you can build spreads out of this, you can leg it together and still have a way to trade from neutral into tomorrow. And as Stone is finding out, and I have known, SPY options are never going to be as efficient as equity options when it comes to making consistent gains. But if you work with the right spreads, the risk is so minimum that you can actually gain something that's more important from them. And that's not just efficiency, it's going to be able to gain the experience.
Guys, has anyone been chucked out of their TradeAvate account and can't get back in? Paper trading, no drama. But yeah, Jeremy, I think you've had this issue with TradeAvate before, haven't you?
I've been locked out of that account a couple times, and
it's only a paper account, but I've got a trade on, and I've got a stop loss and a limit order set. So what do I do? Do I just leave it and see what happens?
If it's paper, it's not a big deal. But if it was real money, I'd be trying to connect to the broker right now. Hey, I'm locked out. Close my position, and I don't care what it is. They do have a chat you can get to from the website. Even if it won't let you log in, you can get to it.
like I say, it's only paper trading, it's no drama, and I've got a stop loss in place, so whatever. But let's just say I've had the same experience as you were getting that one time.
And that made me so mad. I literally closed the damn account, and I was looking to get back into futures with that account this year. They never closed it, so I went okay. I went and deposited money in it. They accepted the transfer. It showed up in the account, and then I was going to wait till February 1st to pay for my data so I could start day trading, futures right on February 1st or 2nd if it took a day to process. That was my plan. I went to go buy that data after having deposited the money in the account, and I go to log in, the account's gone. There's no account number, no balance, no nothing. I'm like, well, that's interesting. I get on the support line. I'm like, hey, what happened? Oh, that account shows it's closed. I'm like, well, I just made a deposit to it this year, so it shouldn't be closed. Well, it is. Okay, well, who do I talk to now? So they ran it up the chain, and now they're telling me there's a check in the mail. So when I get the check, it should be here today or tomorrow. I will probably put that somewhere else. I'm a little upset. I like TradeObey. It's a great app. It's still useful. I'd love to be able to trade it. That was just kind of another annoyance. I might still consider opening an account if I can't figure out how to get TradeStation to trade efficiently like I want it to. I want that 10-second chart, and I want that simplicity of trading. I want to be able to be fast with it. That's what I want in a futures trading account anyway. Maybe they'll get over their issues. I know that some people have been annoyed by NinjaTrader for years. I get it. I've seen it. I've heard it. I'm not, biased one way or another. I'm going to be honest about anything. I don't care if we even have an affiliation with them. I'm going to be direct. If it annoys me once and annoys me twice, 3 strikes, it's on the block for me. Sorry. But what it comes down to is I understand that they bought TradeObey out. TradeObey was its own entity. NinjaTrader bought them out. And even, I don't know if you guys were present on the call when I had them in here. I was like, look, I love you guys. This is awesome. Great that you bought them. Please don't change anything because this app works flawlessly. I love it. Please don't mess it up. And I was implying that don't, because I've heard people complain about NinjaTrader before with kind of similar issues. Don't NinjaTrader it. So here I am kind of like, live to the world saying, hey man, I've been pissed off a few times with this being locked out of the account. And here it is happening live to one of our members again. And this is an issue, Things happen. I get it. It's unreliable sometimes. I've even had issues with other trading apps that have gotten past because they're so rare. But when they start to become more and more frequent like this, it just annoys the crap out of me, and it sets me in a bad mood. I know eventually they'll work this crap out. They'll figure out their problems and fix it and make it work flawlessly. It happens. It's still a fairly newish broker, and I know that TOS, TD Ameritrade, went through the same things. And when they changed hands, people were pissed off, locked out of their accounts. They had positions on that just got fried. Yeah, I get it. When they're in developmental stages or they're changing the way that it works, you'll get glitches with any broker. That's purely understandable, especially when it comes to retail brokers. Some of the old brokerages that may not have innovated things for 15 years, they still work great. It's just it just kind of puts you in a place. You know what I mean? It puts a bad taste in your mouth, and I understand. And chances are, maybe they'll get over their issues as soon as this year, and I'll open an account and be fine with it. But for now, I'm just like, I'm put off by it. I'm not even trading futures at this point because of it. So if you've been wondering why I've been focused on tracking price action with my Webull app on SPY to help you out with futures trading, that's why. Ordinarily, I would have a corner cordoned off here for my TradeObey app, and I'd show you what I'd be doing with it live, but I don't anymore. As far as the other side of it, though, I've been enjoying teaching some really cool option strategies that have been just absolutely killing it in the market. So, it's not doing me any harm to not trade futures right now. I can trade options and have the same success. Just switch products. I guess rant over. Yeah. Yeah, Robinhood does lag a tiny bit. Their real-time data seems to me like it's maybe delayed a couple of seconds, maybe. That's kind of given. It's not the product, it's how you use it. And it's like we keep saying, like, it's not what you trade, it's how you trade it. So Robinhood has its place with me, and I use it for some of the most successful options trading strategies I've used thus far. I've done with my Robinhood account. And the best thing of all is it's commission free. Yeah, people were complaining about the high frequency orders. They make money on orders, and they're a penny off of the bid ask or whatever when you go to make market orders. Who cares, guys? That's what limit orders are for. Use the app in a way that makes sense for you to trade, while not giving them money, and it works fine. But when it comes to options trading, it's been flawless for me. I freaking love it. I have just been able to completely do whatever the hell I wanted with Robinhood when it comes to options, and haven't had a hiccup yet. I was even able to sell call credit spreads when GameStop tipped over. Everybody else was complaining that they couldn't buy any more shares. Options traded just fine. So it's not what product you use, it's how you use it. But when it comes to being locked out of it, that can be an issue. All right, we might get continuation for a bearish trend here today, and 409.80 is next on the mark for targets. I had a pivot there at one point, but it disappeared. The extension can go to 408.80 down here into the next liquidity zone. Kind of keep that in mind. This is kind of an expected pullback, though. If you look at the daily chart, I've been forced to this 3 times today. Look at it just like you look at any other measured move. They're either going to be a 2-leg or a 3-leg. This pullback's expected. There's 1 leg. There's your pullback. There's your second leg. It exceeded the target. Pullback is natural here. As long as it doesn't breach the 8 period, it should accumulate here, and can possibly make the 3rd leg, which would take us to that 426 to 428 target up here. But it can also break over here and retrace down to the 50% mark, which would be like 395. That is very much on the table. Can certainly happen. By now, with all of these relief rallies that we've had in this bear market since the tip over, treat it like it's just another relief rally until it proves you wrong. And then, like I said, adapt and change with the leaves. Adapt and overcome. So when it feels like you've been making easy money and you start to question it, do so. Dang. Yeah, I don't like trading equities on Robinhood unless I'm doing a wheel trade or something like that. Then it works flawlessly. So far for me, I have level 3 options trading on my Robinhood account, and it just does everything I need it to do and more. It just makes it easy. I can really easily set up spreads where I don't have to go and click a bunch of different places to build a spread. I can just tag 2 different options, set a limit order, and fire away. All right, well, it's going on 12 o'clock. I think I've had enough in the morning. I'm going to probably go eat some lunch before the market eats my lunch. I always say, go eat something before the market eats you. Probably come back in power hour. We might get some accumulation through the afternoon. Maybe by about 1 o'clock we'll know if it's going to change directions and retrace this entire trend, or if it's going to set up accumulation and break into a bearish measured move. We'll know by about 1 o'clock, I think. So I'm going to take this time to go eat some lunch and be ready to just come back at it in the power hour mostly. Good. So we have a someone on our YouTube chat here, Parrish, says, "Good morning. I'm taking the courses now. Really like to start in options. Completely newbie. Any advice on learning? Getting overwhelmed? Thanks." There is a lot to learn when it comes to options, and there's a lot of moving parts. I would say that there's two ways to do it. Kind of cut your teeth trading really, really cheap, out of the money spreads on SPY just to get an understanding on how they work. And it's just, call debit spreads, put debit spreads, whatever you got to do. That's your most risk averse approach. You can try day trading single contracts, streaking a trend. If you're intimidated by opening up a spread, that's fine. Unfortunately, you're going to have to cut your teeth on it at some point and get over the hurdle of fear. But the first thing you want to do before you even do that, learn price action. Learn how to identify trends, how to identify reversals, patterns, what have you. Figure that out first and then go mess with the options if you haven't already.
Back in my TraderBait account.
Oh, good. Did it work out okay?
Yeah, I'm still in the trade. It hasn't exited me, but it was just a bit weird how it checked me out and it wouldn't let me in for about 10 minutes,
Yeah, it did that to me that one time for like...
Yeah, I remember. And if that was real money, I'd be panicking by now, I'm not going to lie.
Oh, gosh. Yeah, I was upset even though I was winning.
Yeah, I know, right? And like I say, this is paper trading, and it's still a bit sort of like, I'm going to blow up my account or something might happen. You just don't know.
Right. That's for sure. All right, well, I'm going to take a quick break, go eat something. I'm going to sign off of YouTube. Thanks for joining us, guys. And yeah, support the channel if you can. Give us a like, hit the subscribe button, stuff like that. But mainly, if you really like what you see here, tell some friends. Talk about us. That's the most gracious return we could ask for. Is just to go and talk about us. Go tell your friends. And that's all I could ever ask. We're at a point where we're like looking to grow, and anything that we take in, whether it's ad revenue from our YouTube channel or whatever, all it does is keep the lights on so we can grow. That's what we're interested in. We like teaching. We love being in this position to teach people. And my gosh, the long-term goal, if this all works out, is like we are literally looking at, it would be awesome if we got a big sponsorship and just became a nonprofit. That'd be cool. But, we'll kind of play it by ear in the meantime. And in the meantime, our focus is we want to get to a point where we have a big community where we can teach as many people as possible how to catch their own fish in this market. And we want to give every bit of knowledge we have on price action, options trading, futures trading, the whole shebang. We want to be that guy. We want to be the people who provide as much as we can. And that's just it. We want to bring that value out there. That is that authenticity and heart that we really focus on, is that we want to pay it forward. And even our members, they help each other out. That's the whole point of a community. You hear Victoria here in the background. She's getting knowledge from us, and she's helping out other people by helping them with the stuff that they need to learn too. And it just comes full circle when we start seeing our members just helping each other out. That's what gives us the feels, and that's the whole point of this, is to grow to a point where we can get more and more people into the market successfully and profitably. We want to give the market back to the people, and that's how you do it. You just grow, and you get smart people doing smart things together. It literally gives the market back to the people. Get these hedge funds out of here. Let's take them out. Kidding. They gotta make a living too. Anyway, thanks for joining us, guys. We'll see you tomorrow. And probably, I'm gonna shoot for like 10:30 tomorrow to get on YouTube if I can. I can't set a specific time on it because sometimes we got a lot to go over with our members internally before we get out on YouTube. But keep an eye out for us, and if you hit that bell, it'll tell you when we're live. All right, thanks again, guys. We'll see you tomorrow.